Hey everyone, ready to dive into what really happened in the Singapore market today? Buckle up, we've got some interesting stories to unpack.
Definitely a lot to go over.
So let's kick things off with a quick look at the overall market. The STI, Singapore's main stock index, dipped a bit today.
Yeah. Could be some global anxieties playing out there.
Oh, what makes you say that?
Well, remember Temasek, big investment firm here in Singapore.
Right, of course.
They've actually voiced some serious concerns about what a Trump win in the U.S. elections might mean.
Oh, wow. They think it could affect us all the way over here.
That's their take. They're worried it could trigger a slowdown in global growth, which, eventually impacts everyone, not just the U.S.
Okay, so definitely something to keep an eye on. But for now, let's shift gears and zoom in on some specific companies making waves. Starting with, well, a bit of a shocker, Hong Kong land.
Yeah, big news there. They're pulling out of the build-to-sell residential market. Huge move.
That's massive. They're known for property development, so what's behind this sudden shift?
Well, they did report a loss for the first half of the year, so maybe that's playing a role.
Makes sense. So what's the new game plan?
Seems they're going all in on fund management, aiming to manage, get this, $100 billion in assets by 2035. Ambitious, right?
That's a serious goal. And they're planning to double their profits and dividends, too. Bold move. Okay, now let's talk about REITs, always a hot topic for investors. Mapletree Industrial Trust had some good news today.
Definitely positive for those invested there. They announced a slight increase in their DPU, those payouts to investors.
Right, distributions per unit. So what's fueling this increase?
Looks like higher occupancy rates and rent increases are doing the trick.
Solid performance. But it wasn't all smooth sailing for REITs today, was it?
No, not quite. ESR REIT and Far East Hospitality Trust both saw their income dip.
Oh, what happened there?
ESR REIT sold off some assets, which impacted their earnings, and Far East Hospitality Trust, well, remember how hotels were used for isolation last year?
Right.
They got a one-time boost from that, which they obviously don't have this year.
So those temporary factors can really skew things. Speaking of ups and downs, what about the Capital Land REITs? Any updates there?
It's a mixed bag. Capital Land China Trust saw a drop in income, lower occupancy, and rent, mostly due to the situation in China.
Makes sense.
But on the flip side, Capital Land Ascot Trust, their lodging-focused trust, actually saw profits rise. Acquisitions and some smart financial moves helped them out.
Okay, so even within the same family, you can see how different segments perform. Really highlights why diversification is so key, right?
Couldn't agree more. Don't put all your eggs in one basket. Now, another REIT that had a good day, Star Hill Global REIT. Their income went up thanks to solid performance in their Singapore and Perth properties.
Nice. Anything else contributing to that?
Oh, and the exchange rate with the Malaysian ringgit worked in their favor as well?
Right. Currency fluctuations always a factor to consider with international holdings. All right. We've talked about real estate quite a bit, but let's switch gears for a moment and talk about Cordlife, the cord blood bank.
They've had a bit of a rough patch lately.
They have. So what are they doing to get back on track?
Well, they're holding a meeting next month to appoint new auditors, hoping to cut costs.
Makes sense.
They're also trying to get approval for their directors' fees, something they couldn't quite get done at their last meeting. Seems like a bit of internal restructuring is in order.
Definitely sounds like they're working to regain some stability. Okay, now for something completely different. The grocery scene.
Who knew supermarkets could be so exciting, right?
Well, Shang Sham, a popular chain here, seems to be doing something right. Their profits jumped over 12% last quarter.
Yeah, they're killing it. Opened 5 new outlets, which definitely helps. But even their existing stores are seeing growth.
That's impressive. What's the secret to their success?
Seems like a combination of smart expansion and, just running a tight ship.
Classic winning formula. But before we move on, we have to talk about the SGX, the Singapore Exchange, making some waves today.
Right. They're launching a brand new way to invest in some big-name Chinese companies.
Oh, interesting. Tell me more.
Think Alibaba, Tencent, BYD, HSBC, Bank of China. They're all part of this new offering called Hong Kong depository receipts.
So how do these work exactly?
Well, they essentially let you tap into exciting sectors like AI, electric vehicles, and finance, all without directly investing in the Hong Kong market itself.
Clever. So it's like getting a piece of the action, but with a bit of a safety net.
Exactly. More options, more diversification.
I like it. Okay, before we move on, what are your biggest takeaways from today's news? Anything that particularly stood out to you?
Well, I think it really underlines how these individual company stories all tie back into the bigger picture of Singapore's economy. It's a fascinating interplay.
Absolutely. And it's a reminder that staying informed is key. We'll be back in a moment to dig even deeper into all of this, so stay tuned.
All right, welcome back. I hope you're ready for more because we've only just scratched the surface of today's Singapore market moves.
Absolutely. There's still plenty to unpack.
I keep thinking about Temasek's warning about a potential Trump win. It's not every day you hear such a prominent firm make such a bold statement, right?
Yeah, definitely raised some eyebrows. What exactly their reasoning behind this warning?
Well, Temasek takes the long view when it comes to investing. They're not just focused on short-term gains, they're looking at the bigger picture. And they're concerned a Trump presidency could lead to more protectionist policies, more trade tensions, the kind of stuff that can really disrupt the global economy.
So it's not necessarily about Trump himself, but more about the potential fallout from his policies.
Exactly. They're essentially saying the risks associated with the Trump win outweigh any potential benefits, at least from a global perspective. And remember, Temasek's portfolio is pretty diverse. It spans multiple countries and sectors. Any instability in the global economy would hit them directly.
That makes sense. It really underscores how interconnected the global economy is. What happens in one part of the world can have ripple effects everywhere else.
For sure. And for investors like us, Temasek's warning is a reminder to pay close attention to those global events, especially something as big as the U.S. elections.
Absolutely. It's not enough to just focus on the numbers. We need to understand the bigger picture, the political and economic landscape, to make informed decisions.
Couldn't have said it better myself. Now, let's bring it back to Singapore for a bit. Earlier, we touched on REITs, but there's another major player in the real estate scene I want to revisit. Hong Kong Land. Remember their decision to exit the build-to-sell residential market?
Oh, yeah. That was a big one. Seemed like a pretty drastic move.
It was a bold move, but if we look at it in the context of the bigger trends, it actually reflects a shift we're seeing across the real estate industry.
Okay, I'm intrigued. What kind of shift are we talking about?
We're seeing a move towards diversification of income streams. Traditionally, real estate companies were heavily focused on developing and selling properties. But now they're looking at other avenues to create a more stable income flow, like fund management, for example.
So instead of putting all their eggs in one basket, they're creating multiple baskets, each with its own potential.
Exactly. And Hong Kong Land's pivot to fund management is a great example of this strategy in action. They want to become a major player in that space, which could provide a more consistent and predictable income stream compared to the, let's be honest, sometimes unpredictable world of property development.
That's fascinating. It makes you realize how companies need to constantly adapt and evolve to stay ahead of the game. It's not just about sticking to what you know. It's about identifying new opportunities, new ways to create value.
Couldn't agree more. It's about agility, anticipating those market shifts, and having the courage to make those bold decisions. In today's world, that's more important than ever.
Speaking of bold decisions, let's talk about the SGX's new Hong Kong depository receipts. I'm really interested in this new investment opportunity. Sounds like a great way to tap into China's growth without directly investing in the Hong Kong market.
Absolutely. It's all about giving investors more choices, making it easier to participate in those global markets. And these receipts offer exposure to some of China's most innovative companies, the ones driving the future, so to speak.
You're talking about companies like Alibaba, Tencent, BYD, right? Companies at the forefront of e-commerce, technology, even electric vehicles.
Exactly. And these sectors are poised for massive growth in the coming years. For investors looking at the long game, these receipts are a really compelling option.
It's almost like a way to get a front row seat to China's economic transformation, but with a bit less risk.
Precisely. More options, more control, more potential.
Definitely something I'll be looking into further. Okay, before we wrap up this segment, let's zoom out for a moment and look at the Singapore market as a whole. What are some key takeaways for investors from today's news?
I think the biggest takeaway is that diversification is more crucial than ever. We're seeing some sectors outperform others, and even within the same sector, there are winners and losers.
Like they say, don't put all your eggs in one basket, spread your risk, explore different asset classes, and be prepared for the unexpected.
Absolutely. And equally important, stay informed. Keep your finger on the pulse of what's happening both globally and locally. Understand those forces shaping the market, from geopolitical events to company-specific news.
Knowledge is power, especially when it comes to investing. We've covered a lot today, from REITs and property giants to those global economic concerns and even the world of supermarkets.
It's been a whirlwind, that's for sure.
But we're not done yet. We'll be back in a moment for the final part of our deep dive into the Singapore stock market, so don't go anywhere. Welcome back to our deep dive. We've covered a lot of ground today, from property giants making big moves to, well, the potential impact of the U.S. elections on the global market.
It's been a fascinating look at how these seemingly separate events are actually interconnected, shaping the market in unexpected ways.
Before we wrap up, I want to circle back to something you mentioned earlier, diversification. It seems like a recurring theme today, and for good reason.
It's not just about spreading your investments across different companies or sectors, though that's certainly important. It's also about diversifying your sources of information.
Okay, so expand on that a bit.
Well, think about it. You wouldn't rely on just one news source for all your information, right?
Of course not. You need a well-rounded perspective, different angles on the same story.
Exactly. And the same principle applies to investing. Read different articles, listen to various podcasts, talk to other investors. The more perspectives you gather, the better equipped you'll be to make those informed decisions.
It's like a balanced diet, but for your investment knowledge. You need that mix of insights to stay healthy, financially speaking.
I love that analogy. And just like with a healthy diet, be mindful of the quality of the information you're consuming. Make sure your sources are reliable, credible, and as unbiased as possible.
So diversify your investments, diversify your sources of information, and be discerning about the quality of that information.
Got it. Any other pearls of wisdom for our listeners before we sign off?
Don't be afraid to ask questions. If something's unclear, if you need clarification, seek it out. The more you learn, the more confident you'll become as an investor.
Great advice. Never stop learning. Never stop asking questions. And remember, investing is a journey, not a destination. There's always something new to learn, new opportunities to explore, and new challenges to overcome.
Well said. Who knows? Maybe we'll uncover those new opportunities and challenges together in our next deep dive.
And on that note, that's a wrap for today's exploration of the Singapore stock market. Thanks for joining us, everyone. Stay curious, stay informed, and as always, stay invested.